Hello and welcome. It's the weekend video. It's Enda here, and welcome to. Did I just say that? Welcome to the weekend video. It's Friday afternoon over here. The market is just about to open over in the States, and of course I'm jumping the gun, but we got to get these done when we can get them done. Okay, I'm going to dive in to the FX first, and then I'm going to cover metals and stocks and crude oil, crazy crude oil, later on. Okay, start with euro dollar. Where do we stand? Here's a 4-hour chart. You can see that I'm working with a 1-2 pattern to the downside still working on a 1-2 pattern to the downside. The action over the last couple of weeks has just drifted to the downside. It looks corrective. It looks like a 3-wave decline in a possible B wave, a B of 2, let's say. And it looks like we should get a rally in wave C of 2 to complete this 3-wave correction before falling into a third wave again. Again, well, this pattern is probably going to take another 10 days, 2 weeks to close out, because I think we could see a little bit more downside in wave B. We have hit minimum target. You could see that we broke the previous low, so yeah, the fact that we have broke the previous low and we've spiked does kind of hint slightly towards the idea that maybe this C wave is finished, but I don't like the internal pattern just yet. Okay, so let's get into the hourly chart and we'll see what that internal pattern may be trying to tell us. You can see we have wave A up, working on a 3-wave pattern, wave B. The alternate count, I think we can probably discount that right now. The only other alternate that could be possible would be maybe another pattern operating in this internal B wave of B of 2. So it's the action is speaking to a correction. We've got a very overlapping, very non-directional, very confused pattern right now. So it's developing, but I still think that we will see one more high in a C wave, and I do not think that this B wave is complete yet. I don't think we didn't break low enough below this previous A wave here to count that as a C wave complete. So maybe there's something else going on here in terms of the second wave, possibly. This could be a wave 1 low here, so it could be expanded flat second wave before we fall into a 3-4-5 pattern later next week. So I would expect this C wave to complete, by probably Tuesday, at a stretch Wednesday, and then we would head higher again in wave C of 2. Now I'm going to get rid of this alternate here and allow for the possibility of another high in wave B before falling into wave C. This is the ongoing, the continual battle with the correction that you face. It's just sometimes there is no way out until you've reached the end of it, or there is no deciding what the hell is going on until you've actually reached the end of it. For the moment, I'm going to stick with the possible downside in wave C to complete wave B. I have a price target of about 105, 105.30, 105.50, where this C wave would hit this lower trend channel line here, and then we would rally again. So that would make wave 2 an expanded flat, and you would expect a wave C of 2 to break out above 111.50 again before we spill down into a third wave. Okay, so next week I want to see this B wave close out and most likely begin the rally in wave C, but concentration on closing out this B wave first. Okay, I've gone, well, actually I'll go to the daily count in cable. I do not like the way that this decline has developed, even though that sharp move lower was, that was That was pretty impulsive. That was indicative of what I was expecting into a third wave, but it just hasn't. The rebound off that low just hasn't favored a five-wave pattern. So what am I doing about it? Well, I'm going back to 2016. That's what I'm doing about it. Follow me on back to 2016. Yeah, we have a wave 3 low here. And that corrective move up into the beginning of 2018 was always viewed as a fourth wave correction. And then we began our trek down again, which, not surprisingly, was viewed as the beginning of a long fifth wave down. The fact that we've just continued sideways and the internal pattern continually keeps breaking out into three waves, it's suggesting a possible triangle fourth wave. So, that initial move up could be A of the triangle. The decline into that spike low recently could be B. We could have started wave C, and then it basically just suggests that we will continue to drift sideways and contract the range of the trade, or for another 7 or 8, 9, 10, 11, 12 months, depending on how long these internal moves take to play out. So with that alternate account in mind, you would expect it explains, let's say, this three-wave decline, and it explains the sharp rise off that low. So while I haven't discarded the main wave count, I have one eye firmly fixed on this alternate count as well. So we could have a three-wave rally in wave C, with a expectation maybe that there'll be a wave C of C rally coming our way, sometime soon. Okay, that's a daily chart. There's no point in going into the 4-hour chart. You can see that we could be working on some sort of internal B wave in the alternate count. So that could be wave A up, maybe a triangle B wave, and then wave C. In terms of that daily count, the wave C here would or should top out somewhere around 131 maybe, before we head down into wave D again. Okay, let's get into the hourly chart. Now, I have not discarded the main wave count. Reason being, as we haven't seen any reason to discard it just yet, apart from the fact that the move higher in this possible fourth wave is quite extended. The extended move higher is the main reason why I've been looking at that alternate count. Okay, so next week, if we don't get a clear five-wave pattern to the downside, and a nice break of that B wave low there, that 121.60 level, if we don't get that, then I think we could probably concentrate on the alternate count, and we'd expect some sort of rally in wave C of C. Okay, yeah, we're kind of maybe kind of wading through no man's land here at the moment, so I think I need to leave this another few days to, let's say, distill what's actually happening here. And maybe by the end of today we have some more clarity on it. So we'll know tonight in tonight's update. Okay, so dollar yen. So far so good. Again, this is a long kind of how would you say, interminable triangle going on from 2015 in this case, rather than 2016 in cable. Okay, the 4-hour count, it could have wave D completed at that is that March high, that end of March high, and maybe we're working lower in wave E right now. Yeah, so it's been, there's a reasonable chance that we have a triangle completing. So that'll be wave A down of E. This will be a triangle B wave of E, and then we'd expect to move lower again in wave C of E. So let's get into the hourly chart and see how that is tracing out. You can see we have wave A down. You could, like I said, there's a few different ways to kind of to play this at the moment. I'm looking at it right now as a triangle within wave C. It could also be viewed as, let's say, if wave A finished down here at this 106.90 level, it could be viewed as wave A down. This would be A, B, C, D, and E. I just don't like that. It would mean that the triangle would be finished way back here within the action, like a week ago now at this stage. And this continual corrective sideways move does look like it's a contracted triangle. You just can't deny that, especially since we've got a spike lower in the overnight trade and next to no movement in the futures, or next to no movement in the this was mostly the overnight trade, the early morning trade this morning. So it does look like we're going to continue lower, and that would fulfill a 5-wave pattern here. So I'm going to leave without changing to that B wave triangle. So it could be, an expanded flat wave B, and then 1, 2, 3, very long triangle wave 4, and then if we got a spike down again, let's say down towards that 106 level, that would be wave 5, and then it would begin to look higher again. Excuse me, begin to look higher again to begin wave 1. Okay, and if this count is correct, then we are coming to the end of this long and interminable triangle, and we should be moving higher again. Okay, let's get into stock market. Should I go to the daily count? Not a whole lot to say in the daily count. Here we are at the wave B highs. We haven't moved. Well, we moved off it this week. It's been a choppy move off it. There is one way of interpreting the action over the last few days that could signal a corrective move within this wave B. Because we're so close to the end of this B wave now, I think it's definitely worth keeping our eye on the downside. Yeah, the daily count just shows that this is a pretty bog standard clearing rally that I've always suggested that it was from the beginning. We've got up to the target level. We've hit that 24,000 level, and we should spill down into wave C. Didn't get it this week. Didn't get it last week. Momentum is dead. After hitting an extreme peak again, you will notice that the buying in this bear market rally has reached peaks of momentum higher in terms of MACD then, higher than the highs, the all-time highs that brought us, the action that brought us to the all-time highs, the action that brought us to, comparable actually to the action that brought us up to the wave 3 high at the beginning of 2018. So 2 years ago, and we are sitting at a lower high. So that speaks volumes in itself. It speaks to the idea that this is a clearing rally. There was such a heavy short position at the bottom here that the shorts just tried to cover at any cost. And I think that job is pretty much done right now. I'd say you would start to see a rollover to the downside. Actually, a lot of long-term shorts are short positioning in total. Excuse me, from hedge funds and from not institutional players, but the smart money basically is still short, and I would say they're probably building short positions again at this point. I haven't looked at the COT data in a few days, so I'll have to look at that again. Probably hasn't been updated, so I will look at that next week. Anyway, daily chart. This is the B wave high. Let's get down to 4-hour chart. Okay, 4-hour chart shows a corrective rally in 3 waves. We've peaked out between 50 and 62% of a retracement. If we pull that open a bit, and we've retreated reasonably well off that high, and we've got a couple of let's say a spike low yesterday evening, and a further lower corrective high. Corrective lower high this morning in the futures. So there's probably the market's actually open now, I'd say. So it depends on how today's trade goes. if we continue lower as we did yesterday in the last couple of days, well then I think we could pretty much call wave C of B done, and we would say that we're working to begin wave one of the larger degree wave C. So I'll mark that in here, and wave one should bring us back probably well below this B wave low here, well below 21,000 again. Break that B wave low and work on again another lower high. Wave three of C to downside will bring us to fresh new lows once that gets going, but that's probably a while down the road just yet. So you will notice that I've extended this line here off the B wave low. So that's the wave A, this extent of travel in wave A, and you can see if you move that off the wave B low, wave A equals wave C, pretty much right at the 62% retracement level. So that is something to keep in mind. If we do get a fresh new high today, we'll probably just target that 62% level and then we'll head lower again. So I'm hopeful, bearishly hopeful, if you can be hopeful for horrible outcomes. But I am hopeful that I'm not going to choose a different word, that we've got a lower high in place and that we'll move down into a third of wave one. Let's get into the hourly chart here. You can see that I have labeled it in the most bearish fashion that I can right now. So we've got a move into a possible wave one low. Maybe wave two is done. Maybe there's a larger wave two pattern developing here. I mean, we could see some sort of flat developing here as well. So we could move up three waves, down three waves, and then rally to complete an alternate wave two somewhere early next week. But the outcome will be the same. We shouldn't reach much of a higher high on that. Trading is flat right on the open now. Well, you see, actually, I've disconnected for the moment, but I'll have to see how this today's trade goes before nailing, let's say, my colors to well, I pretty much have nailed my colors to the flagpole here by calling this wave one and two down. Let's see, we could get a move lower in wave three. That'll be wave three of wave one, and if that's the case, then we should decline pretty rapidly from here. Futures were higher. Yeah, we'll see how the first couple of hours trading goes, and later on this evening we'll obviously know more. Question today then, or question for next week: is wave two done, and do we move lower into wave three? Odds are yes, we do, but the internal pattern here may have to be figured. We may get another couple of days of a sideways action before that spill into a third wave comes. Okay, let's get down into crude oil. No, gold. Here we are. You know, we've got a second punch above, you know, the solid 1700 level, and it's a pretty solid punch above 1700, and the internal pattern here does suggest an impulsive move higher. So, what am I calling this then? Very possibly, we are going to extend in gold to the upside. Very possibly. I haven't ruled out this idea. Let's get to the daily chart actually. Move you over. This idea that we have a 1 2 1 2 and now we are only moving into wave 3 red rather than having that complete already. That's still fresh in my mind. That's still front and center. If that's the case, then we move to all-time highs sooner rather than later, especially if we go by the alternate short-term count. Okay, so the 4-hour count says that we have wave 1 and wave 2 may be complete of 5. Alternate count says that we are only beginning wave 1 and 2 of 3. Well, you know, if we are moving into a third of a third phase soon, well then gold could rocket. Okay, let's get into the short-term action. I'm still allowing for one further low in a second wave in green here before calling for a third wave to begin. I do like the fact that this is a pretty nice 5-wave pattern. Maybe not complete yet. We could have 1, 2, 3, and then some sort of fourth wave going on right now before punching higher again. If we do by the end of the day, if we rally above let's say the 15 or 1750 level again, that is suggestive of a fresh new impulse wave building off this low here, and this could be interesting in terms of a third rally. Most of my alternate accounts right now are varying, let's say, varying degrees of bullishness in terms of time. This initial alternate account here would view an imminent rally in a third of a third. This alternate account, well, actually, this is part of the same. The alternate account, let's say, on the daily chart, would allow for, say, a larger correction before we run into a third of a third. On the 4-hour account, yeah, okay. Just get back to the hour. For the short term, it looks like this. Well, let's. I'm not going to lead with that. I am going to say that it is very possible that we get one more drop as part of a flat correction to complete wave 2 before we rally in wave 3, and I would allow for a drop down below 1657, maybe as low as these let's say this contraction, this fourth wave correction here, and this third wave high at 1640. So possibly between 1650 and 1640 for wave C of 2 to complete, and then a rally in wave 3. If we get more bullish action before that, well, then we would move into a third wave quicker, a third wave quicker. We'll just have to track it day by day as we usually do. Okay, let's get into crude oil. And crude oil is just such a weird twilight zone to be working on right now. And this derivative chart does not show the extent of the losses, obviously, because it went to negative 40. And who would have thought that? Hey, I didn't. I surely didn't think that we would go negative on crude oil prices. And the indications are that we will go negative again once contract rollover comes next month. So, you know, the absolute carnage in the crude oil space may not be over just yet. Especially if we're working on a wave 3 finished and a wave 4 and 5 scenario. Right. Let's say the daily count will allow the daily count will allow for a correction again. I would say back up to around the $30 level. So let's get into the 4-hour chart. 4-hour count, what are we at? About $18 today. Again, I can't really trust this derivative chart right now because it's not reflecting. It's just been thrown for a loop basically by the action over the last week. I can see 3 waves up off the low on the daily chart, off this let's say $6.50 low, and that's only an interim low. So if that's 3 waves up, then we'd expect 3 waves down, maybe in a B wave, and then a rally in a C wave. So I'm still tentatively looking for a larger fourth wave to complete up around that $30 level. And if we get a 3-3 pattern over the next few days trade, then that might suggest that this wave C would be on the cards next. Again, you know, it's been such a crazy trade in crude that just can't rule anything off the table right now. We could collapse immediately into a 5th wave down, and there's nothing that we could do about that really. Okay, so I'm just going to leave it. I've been kind of hands off on crude for the last week until we made some sort of short-term sense of what was happening, or until we got some sort of sense of what was happening in the short term. We do have a three-wave pattern to work with, so I'm going to allow maybe for a three-wave decline early next week. Okay. S&P, here we are, same damn pattern that we're looking at in the Dow. We have stalled between the 50 and 62% retracement again. I'm going to get a measure on the extent of wave A versus the extent of wave C. And actually, in the S&P, wave C has reached equality with wave A. So, what are we doing today? If wave C has reached equality with wave A, we're right in that Fibonacci, pretty general Fibonacci retracement level. We've already diverged lower on the 4-hour chart in terms of momentum, both RSI and MACD. RSI has touched slightly below the 50 level again, so we are creating bearish divergence off a three-wave pattern with the expectation that we're heading down into a C wave, where wave C and wave A have reached equality, where the market has driven to clear out, let's say, over the extreme, let's say, negative positions that had been built up on the downturn. I know we haven't turned down big time just yet, and I know I've been calling for that over the last week, but I just can't see another way out of this one. So, kids, let's prepare. Let's be cautious and prepare for some serious action to the downside over the next week, especially if we've got a 1-2 pattern off that wave B high in place. Okay. Here we are, the early trade this morning. We did trade higher after spiking lower yesterday. This could be a 1-2 pattern, so we could be 1-2, 1-2, depending on whether this wave 2 high holds. We will see. I'll just have to let today's trade tell me. Just let the action speak for itself. The only other alternate scenario here is that wave A is done. We had a B wave correction, and then this wave C maybe we might be still carrying higher in the wave C. Maybe this is some sort of expanded flat correction, fourth wave. If that's the case, then we pop to a new high. We hit the 20 or 62% retracement, and we probably gap lower off that in wave 1 down. Like I said, I think all the sign posts in the medium to longer term are pointing lower, and the risks are building seriously to the downside again. This was a nothing rally in terms of participation. There's still a very very negative slant to the internals. We reached even more overvalued in terms of forward operating earnings. We reached an even higher level of overvaluation at the wave C high here than we did at the all-time high. So that tells you something. The other thing that could be happening here is a slightly larger wave 2 could be underway. So we could have, like I said, for the Dow, we could have a three-wave decline into a double bottom at about 27.20, and then we rally in a C wave of wave 2. So a larger 1-2 pattern before a kind of waterfall event or watershed event down into a third wave. I'm going to leave that there for the moment. Okay, so next week, I still want to see an acceleration lower to begin wave 1 of C. That's the outlook. Okay. The S&P is done. Let's get into silver. Silver, it's been a strange one actually this week in silver. It's kind of creeped up on me where we could be setting up a pretty bullish opportunity in silver here. The the pattern off the low, I was expecting to develop into a fourth wave before we collapse into a fifth wave, but that just hasn't materialized, and we seem to have. Excuse me. It's like I'm 14 again. And my voice is breaking. We seem to have 5 waves up, complete at the wave one high, and we seem to be correcting in 3 waves again. So is this a 3 wave correction to complete a bullish higher low in wave 2 before we rally in wave 3? That is the question. So that's the outlook that I'm working with right now. Wave 1, 2, wave 3 high, some sort of flat correction. Yeah, I think it's a flat. Wave 4, and then a pretty reasonable 1, 2, 3, 4, 5 rally in wave 5 of wave 1. We may have a wedge down of the high in an A wave, or it could be a 3 wave decline. It depends on how you want to read that. 3 waves up here, a small B wave, and then a spike lower into a C wave. And again, this could we be talking about wave 2 complete this internal low here earlier on this week. I'm not so sure about that 1450 low. I wouldn't be so sure about that because the action off that low has been very, very choppy altogether. It has not been impulsive. I just don't see that yet, to be honest. I think that we will see one more drop in a C wave, which should at least break that 1450 level, possibly as low as 1370 or 1380, this previous fourth wave, before we work higher in a third wave. So we have time to prepare here. If this is if you're thinking about going long, or if you're thinking about extending your already long position in silver, yeah, we have time here to work towards that. So we have, if we finish a 3 wave down pattern in wave C of 2, and then we would look for a bullish impulse wave off that low again to create a bullish higher low, and then we would, that's the highest probability point where you would expect an acceleration into a third wave, and it'd be a third of a third wave, so it should be pretty powerful. In the meantime, let's see if we can get this 3 wave pattern complete early next week. Unless we continue higher and we build a clear 5 wave impulse wave off this 1450 low. Okay, but that's silver done. That's the video done. I hope you found that interesting. Until later on tonight, for you subscribers, you beautiful guys and gals, and everyone else, have a happy and safe weekend if you can. We're all boxed up in our houses. Um, at this point, it's becoming, well, it seems to be working here in Ireland. However distasteful it is to my libertarian self. I don't like being boxed up. It's a funny thing when you if someone asks me nicely and politely to just cocoon my family in the house for 6, 7, 8 weeks, I would probably oblige. But the the kind of edicts that we get from central government, this kind of talking down and this kind of it just grinds at my libertarian nature. I just don't like it. I don't like being told what to do. I mean, that's the teenager still in me that hasn't died off yet, and the rebellious phase that just will never go away. But for now, we are holed up, and we do hope that this situation dies off pretty soon. Death to the coronavirus, and life to us again. Okay, have a great weekend. Enjoy. Have a beer. Kick back. God bless. Hopefully, next week will be more fruitful, let's say, to the downside. Bye bye, everyone.